Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. It is Wednesday. We're middle of the week, and we're trying to figure out what's next. You know, we look overseas, and Europe gave back a little bit of yesterday's strong gains, but still holding in there. There was a big, a big raid in a Paris town to go after some of the other terrorists that happened to escape, and they think they might have got the mastermind. So we'll see how that develops. Let's go get those friggin' guys. That'd be awesome if they, grab him. And then Asia was kind of mixed, so not a heck of a lot to go on overseas except for things are hanging around and there's not much volatility or it's contained. As far as our markets, we had a solid start yesterday, and then we pulled back when they evacuated another soccer stadium, and that's kind of what we might see here and there. Headlines out there about potential scenarios that wind up getting either refuted, hopefully refuted and not true, or true, so you have to listen up. But if you look at the chart of the SPX, you will see that overall, our markets are hanging in there. We talked about the low here in August. You had your double bottom. You had your push above, this descending little channel here. Then it basically took out resistance and then hung above there. And then you had your nice trend above the 8-day moving average until it finally broke. And then if you recall, right into the support, okay, you had that red dog reversal on Monday, right around 2022. You had a strong, day on Monday. This was Friday, but that was the pivot. Then yesterday, it paused right into pretty much a spot where it should have. This was some moving averages curling down, some resistance. Better to actually hang out here and not create a pain trade. So if you look a little closer now, we'll see, what happens in the next session or so. If the SPX could stay above this area and maybe have an inside day or so, the next time it tries to get above yesterday's high, which if you want to write down is 2066, perhaps we get another move to the upside. Futures were, off a little bit, and now they're up 4 or 5 handles, so we'll see what's next. Most sectors did, the same thing. They had a strong day Monday. They rallied on Tuesday, giving some follow-through into resistance. So if you would have sold some of your longs, if you took them on that tactical red dog reversal, you made money. And then if you were looking for a fade into resistance, which some do because they like to short, why not, two-way action, you got paid. So now we'll figure out, what is next here. You go to the Russell. Not much to go on here. If you look at the overall chart, it definitely hasn't led. It's pretty much lagged. You did get, that red dog reversal right here. Okay, and then yesterday it was up like $1 before reversing. So if you look now, same kind of thing, reversed right into resistance. So now we'll see if this lower pivot builds for another push, into maybe Thanksgiving, etc. For today, you have resistance at 116.15. We'll see if that can clear it and perhaps fill this gap. You did see that partial gap fill in the spiders. IBBs were a little stronger yesterday as far as sectors. So, perhaps at some point this descending channel here breaks to the upside, and that would probably be healthy, for this sector and the market. This pivot held going sideways, and now, if it could hold a little bit higher here, perhaps there is another decent-sized trade if it were to take back the 200-day with some authority, and that's a little bit higher. So the pivot you probably want to write down first is 331.50. A big move above this would probably tell you that some risk on is happening again, and then all these moving averages come in above that prior pivot at 345. So we'll see if this sector could actually break this, which would be somewhat constructive. I would probably just trade that ETF because every now and then there's these blow-ups in actual bios themselves, and you don't want to be holding those just in case that happens. You might as well just have exposure if you want to with the ETF. Yesterday, a reason for the weakness was oil. Oil that reversed on Monday, gave most of it back on Tuesday, but it's up a little bit today. So it's not a headwind today. It's more of could be a tailwind. The USO, if you look at it, put in that little reversal candle. Okay, first of all, it's been doing a whole lot of nothing. Remember this big potent move that happened in 3 days, and then from there it's been a choppy mess. But the market liked when it was in this upper area of the range and didn't like when it broke this spot, which was like 44 for oil. And now it kind of got used to that. Now your next spot is down here, which is around 40. So as long as oil stays above 40, I think the market's not going to obsess over it. So if you want to take a closer look here, this was your small red dog reversal around that 1291 pivot on Monday. Held there yesterday, and now we're probably up a little bit today. So if it holds it, the next resistance comes in somewhere around this 1340. So again, as long as we're above this little spot here, I think the market's not going to obsess over oil. You start going below 40, could raise volatility. The XLE, after its engulfing day on Monday, hung in there with a nice inside day yesterday. We'll see if this holds. If this holds here, perhaps you get another trade above this spot, and that resistance there is 68 and a quarter. So above 68 and a quarter, maybe you get a quick little pop, back to here. And then if you look overall, you'll see that you do have a bigger resistance coming across, all the way up here. So there's that double bottom into support, and now we'll see if it can get back into this upper area of the range, which would help the overall, market. As far as high beta tech, a lot of the leading stocks did break last Friday into Monday, but most of them held a 21-day. So they gave you a buy the dip scenario, and then actually even gave you a little bit of a, of a fade yesterday, if you were looking for that, because of the big travel range. Amazon itself, had a very big travel range from Monday's I'm trying to show you, from Monday morning, which came into the 21-day right here, into yesterday's open. At this point, see if it holds above this spot, which is yesterday's low of 641, and stays above it for then maybe better action. But at this point, it's very choppy. I would just be a little careful there. Google looks pretty much the same, where you had a small little break of this accelerated trend line below the 8-day, so you had a 2-day window to make some money short. Then you had your red dog reversal right here as it held the 21-day, and now it probably needs a little bit of time. The trade, though, that we focused on that actually was a powerful one was Netflix. Netflix still looks like one of the stocks that could probably make new highs on the year versus many other stocks. You had this big reversal on Monday, with some news that Soros and some of the guys started to position in it. You had your red dog reversal around this, 103 area. Powerful, and then it actually broke and closed above this resistance that we've listed many times, which is around 115. So with that being said, if the market wants to have some leaders, this one looks like it's in the game to make new highs. That's going to happen. It's got to get above yesterday's high first, and yesterday's high is, what is it? I think it was 118.79. I'd love to see it digest above 115 and give you a few inside days before going, but the way this market is so streaky, you never know. Today is an interesting day for Apple. Apple, if you remember last week, had that big gap down because of the slowdown in their orders that one of their analysts came out and said, and then today Goldman Sachs upgraded it. No signs that they were going to do it, and it's up, I think, like $1.60 this morning. So it kind of makes it a little frustrating, for me, who likes to, be long Apple at times, etc. But it'll be interesting now to see what happens here. Okay, if you remember, there was that reversal low at 112-ish right here on Monday. Yesterday, a small inside day. Here is a lot of resistance, and then this is where that open gap is. That open gap starts at 118. So today, see if it opens up. I'd love to see it pull in a little bit, but hold the majority of the gap, maybe buy versus that, and if it's any good, it closes strong and then fills this gap and then comes back in play if Goldman's right. This morning was up $1 and then it built throughout the morning. So the question is, can you buy it after being open and actually make some money there? So we'll see what happens. At this point, I think it's up, right into this resistance. So, some guys might try and fade it off the open. There's a lot of lines here, a lot of resistance. But anyway, we'll see what happens here. This is 116.50. So easy spot to 116.50. We'll see if the gap stays open where, that would kind of give you a little bit of an island bottom here. And then perhaps it comes back in play, which is good for guys like me because I love to play Apple. It's got liquidity, and when it moves through price points, you can get paid. Recently, it's been doing a whole lot of nothing after that report. So, we'll watch it today, and you'll see. I'm not in it now, unfortunately. We'll see if there's a tradable setup. In social media, Facebook gave you some 2A action. Also, this has been best in breed. It broke this ascending channel right here, or it broke the what's it called? Sorry, not ascending channel. The accelerated trend at the 8-day gave you a quick move lower. I put this chart on Twitter. So you could have made some money in a 3-day short, or also bought the dip, made a little bit here. So now you'll see if it could do some work above yesterday's low. Yesterday's low is 104.14. The more it does work above that, perhaps another trade develops to get back towards highs. This is yesterday's high right here, which is 106.20. Maybe we get an inside day and then goes back above. LinkedIn, there was a downgrade report that got refuted yesterday. Some guys made some money buying the dip. It was down like $3, and everyone was talking about it on the VTF. And I know Mark, I think, bought the dip there. He's been watching LinkedIn really well, and it wound up going green, which is good. So now see if it can get above this, which is 248 to get back towards the highs. I'd be careful. It's not the easiest to trade, and it's still defending this big gap up. And if you defend the gap up, usually it means power. Same way, So at this point, though, you want to just be careful as far as your sizing, because some guys did get caught in this down move, and that wasn't fun for them. And it's still below the 8-day, but above the 21-day and above the big gap, so it's in there. Not like Twitter, which has been a piece of what. Thank goodness I don't think I've traded this once since that little shenanigans bag job it did with earnings. So when it broke the 50-day, I think most traders said goodbye to Twitter, and that was when it broke below 28, and now it's just kind of sitting down here, dead and dormant at around 25. So I would just continue to perhaps avoid it, and unless something crazy happens. I don't know what that would even be. So that's Twitter. As far as the banks, we do have Fed minutes a little bit later today. Sometimes they get some action if they sound hawkish. They haven't been doing much. If you want to take a quick look at one or two of them, Goldman Sachs was definitely weaker yesterday. You have still this little reversal pattern intact from Monday. No follow through yesterday. Some other things had follow through. So really, this has got to hold this 188. I would say it has to really hold 190. I wouldn't even give it to there. But anyway, with the futures up, you'll see what happens. The banks have definitely been not the greatest. They gapped up in that hot jobs number and then gave that back. So they're just really in line with the market. They're not outperforming. They're not really underperforming. They're just a whole lot of nothing. It's changed, but maybe today with the Fed minutes, you'll see what happens. A little reversal. This actually held a little bit higher. So J.P. Morgan's, I think, a tiny bit better than Goldman Sachs. So, if you're in J.P. Morgan, maybe be in adverse yesterday's low of 65.89. And really, that's it. The oscillators that were minus 50 on Friday when the SPX was 2,020 is probably only minus 10. So we're not really that oversold anymore. You had that day and a half move in a lot of ETFs and a lot of sectors, a lot of stocks that were good for a tactical long. And then you even had some spots yesterday, to get short into resistance. And I don't know, how you went home overnight, but I was basically flat, and I'm trying to be tactical. It's not the easiest tape, I will say that. You take a quick look at the spiders, which I showed, the SPX. So let's just take a look at this to close. I would say as long as the spiders stay above this little spot right here, which is 204.88, it shows some commitment to this reversal right here. And then with a little bit of time, as we go into Thanksgiving, which historically is a little bit stronger than weaker with the seasonality, maybe this gets taken out and we get a pushback a little bit closer to 210. But at this point, we'll see what happens today. Maybe another inside day, or maybe we continue up, considering that if oil holds up and Apple holds in there and the retail names that bounced yesterday stay bouncy, there's a chance that we do get a little bit of a floater into Turkey Day next week. But again, listen up for headlines, listen up for evacuations, listen up for bomb scares, because that still does create a little whipsaw in the tape. Tune into the chat. If you were on the webinar last night, thanks for attending. I hope you learned something, and I'll see you at today's recap. Have a great day trading.